So this is our final pattern. It's also the only 3-candle pattern we'll show you. There are others, but they are rare.
Sounds good. I'm intrigued.
Like all reversal patterns, it needs to appear in a trend. The Morningstar is a bullish reversal pattern, so it forms in downtrending markets. The first period of a Morningstar reversal pattern is a large bearish red candle. In the first period, bears are definitely in charge, usually making new lows.
And then the bulls take over on period 2.
That's almost the case. The second period begins with a bearish gap down. It's clear from the opening of period 2 that the bears are in control. However, the bears don't push the prices much lower. The candlestick on period 2 is quite small and can be bullish, bearish or neutral, like a doji or a spinning top. This is the star part of the formation.
That means uncertainty, doesn't it?
Yes, and it's period 3 that holds the most significance. Period 3 begins with a bullish gap up, and the bulls are able to press prices even further upward, often eliminating the losses seen in period 1.
Ah, right. This makes sense. So it takes longer for the bulls to gain control in a Morningstar pattern.
In simple terms, yes, that's true. Bears are dominating the trend, but the move is exhausting their impetus. Then the gap down is normally the last push by the bears, and the candle eventually points to indecision by forming a doji or spinning top. The change in sentiment is confirmed by the regenerated bulls, which completes and confirms the pattern.
So I'm guessing that evening stars begin with bullish dominance on the first period, and by period 3 the bears are in control?
Yes, an evening star is a bearish reversal pattern forming in uptrends. The bulls are in control in period 1. This is represented by a large green candle. Candle 2 gaps up, but the bullish sentiment turns to indecisiveness when a spinning top or doji forms. The bears then take over. The price gaps down in period 3 and we see a significant move down, normally wiping out the gains made in period 1.
Can we see one on a chart?
These patterns are quite rare.
Why is that then?
Well, they form over 3 candles, so we need all 3 candles to meet the conditions. The other point is around gapping. This can be fairly common in individual equity markets when trading stops at 4:30 and doesn't open again until 8:30 the next morning. This means the patterns are more likely to form in these markets. In contrast, a currency pair might only be closed for 5 minutes from 10 p.m. to 10:05. The chances of getting 2 gaps in 2 days are a lot slimmer. When analyzing a currency market, you can be slightly forgiving of the gaps. Anyway, here is an evening star pattern in the Nasdaq weekly chart. We have a clear uptrend. The first candle forms in the direction of the trend. Week 2 gaps up slightly and looks like an indecisive spinning top. This is followed by a big gap down and a bearish candle in week 3. As you can see, this preceded a reversal.